Hey everyone, and welcome to Earnings Cheat Sheet for Friday, April 25th. It's Alexis Garcia and Ed Carson here, and we'll be covering some key upcoming earnings reports to help you prepare for the week ahead. And Ed, it is a big week, so what do you have on tap for us today?
Yeah, there's a whole bunch, but just to highlight the big ones would be Meta, Apple, Amazon, and Spotify.
All right, well, let's start with Meta, which is scheduled to release Q1 earnings on Wednesday, April 30th. Earnings for the social media giant are expected to rise 11% to 524 per share, and revenue is seen climbing 13% to $41.34 billion. And here's why we're watching Meta. There's a lot of concerns about Temu and other China e-commerce players cutting back on advertising because of the trade war. We'll also be watching to see if Meta cuts its spending in other places. And we'll also be interested in any AI capital expenditure figures. Ed, analysts have been cutting Meta price targets ahead of earnings because of this China exposure. And in 2024, Meta recorded 18.4 billion in revenue from China. That's about 11% of the tech giant's total sales last year. So talk to me about what's going on here with Mark Zuckerberg and co. And what are you looking for ahead of earnings?
Yeah, growth was already probably going to slow even without tariffs, just because, you can look over on the left, and when we look on the chart, we'll see just the enormous growth in the prior 2 years. So the comparisons are going to get slower. And there were some things that drove that growth, like they figured out how to handle the Apple privacy laws, and there's this and that. Aha. And there's the China growth. Temu and others spend a ton of money on Facebook and Instagram trying to get people to buy, and basically they can't sell in the U.S., so they're not going to advertise in the U.S. It comes to as simple as that. So that's an issue. So will they cut in other ways, and to offset that? Will they cut back on AI capex? I mean, that's just a general concern. There's been hopeful signs this current week. Maybe that isn't the case. We'll find out pretty soon whether or not Google is going to do anything there, but we've seen some hopeful signs, but we'll see. I mean, people might all say, yeah, oh, yeah, it's going great, great, and then quietly cut back. So it may not be immediately obvious if that's the case or not, but yeah, that definitely want to see how that goes. And look, if the economy slows, online advertising might slow in general, not just from China. I mean, so that could be a concern just going forward. It's not immune to recessions for sure. So just have to see how those kind of things develop, going forward.
And Ed, we're on the daily chart here, and Meta stock has shed about 10% year to date compared with its 65% gain last year. And even with gains earlier this week, the stock still remains well below the 50-day line and just short of its 21-day line. But I'm going to jump to the weekly because you brought up that growth, and we can see coming out of this year of efficiency here, just the spectacular growth numbers at the end of 2023. So yes, the comparisons will be harder there. But talk to me about this chart and what you would like to see happen with Meta.
Yeah, I mean, I have to see it break the downtrend, which means getting decisively above the 21-day line. Then it needs to get above the 200-day line and 50-day line. I would say at least the 600 level before I'd really start getting interested, because there's a lot of trading on the left. And to be honest, I'd really like it to get above like 638 or so. So there's a lot of trading in that whole area, and then maybe form a handle. So it's got a lot of work to do. Now, I could surge on earnings, I could tank on earnings, so we'll see. But I think it just needs work. And in many ways, some of these banger caps, we're looking at them because we want to see what it means for other companies, most of which honestly are not doing that well either in terms of their stocks, but still want to see how that does and what it means for the economy, rather than, boy, these could be buying opportunities soon.
And I'm just hopping back over to the weekly chart, Ed. We can see this downtrend a little bit more clearly here. But any other thoughts about the fundamentals or anything else jumping out to you here about Meta?
Yeah, it's a pretty steep downtrend. The fundamentals have been great, but it may just be going to a slower pace. I mean, there's certain things you can do. There's only so much user growth they can achieve. There's only so much they can do, especially if the economy is slowing. And they've reinvented themselves a number of times at Facebook, buying things, but it's just hard to do that, especially at this size.
All right, well, let's move on and take a look at Amazon, which is scheduled to report Q1 earnings on Thursday, May 1st. Earnings are expected to rise 39% to 136 per share, and revenue is projected to climb 8% to $155.1 billion. And here's why we're watching Amazon. We want to see how does the company expect consumers will adjust spending with tariffs and general economic uncertainty? How much are prices increasing for China-based sellers? And on the cloud side, is Amazon still committed to roughly $100 billion in 2025 capital expenditures, Ed? And we've seen Amazon stock jump in heavy volume earlier this week as the rest of US stocks rallied based on comments from President Trump that indicated that this trade war with China could be easing. But as we know, Ed, trying to gauge what will happen in that space has kind of been a fruitless venture here. Market wise. So, what is on your radar with Amazon with earnings approaching in the midst of all this tariff talk?
Yeah, on the e-commerce side, I mean, yeah, they'll benefit maybe from like Temu and others not really competing, but there's there it could just be the cost could be much higher because so many of the goods, not just from China, but from other countries. And so there was sort of a relief on, to some extent, on electronics. That's temporary. So it may not hit them as much as you might think, but they're still going to be pretty intense. And I mean, tariffs might come down, but they're so high in China. I mean, it's a little bit like saying, look, the basketball hoop's been, they could lower it from 20 feet to 12. I mean, not many people are going to dunk. Heck, you could lower it to 8 feet and I'd have trouble dunking. But, they're so high, you could cut them a lot and it wouldn't really matter to some extent. So we'll just have to see. We don't know how that will go on the cloud side, just like with Meta. We're just going to find out how much are they going to spend. And it'll be interesting to see how the market takes that. I mean, will they do that? Does the market want them to spend a lot, or do they want to spend a lot? I'm not sure what the market wants to hear on that front. So there's just a lot there. The growth has been, they've leveraged some great growth, I think, on the cloud and the e-commerce side. You can on the revenue growth has been solid, but really big gains on profits. So again, that much like Meta, there's sort of these efficiency squeezing out that thing. It's probably going to slow, especially in a slowing economy, especially with rising costs on the e-commerce front and maybe some questions about AI. Again, solid performer, just probably going to shift to a slower pace, which, I mean, these are enormous companies. They just can't grow. It's just the pay, that's reasonable that they would slow down somewhat.
And Ed, let's look at the chart here then, because even with Wednesday's early gains, Amazon finished above this 21-day line here. It's the first time it's closed above that short-term moving average since March 27th, but we can see still well below the 200-day and 50-day lines. So thoughts on the chart here?
Yeah, a lot of work needs to be done. It may take a while because it would look very strange to go straight up. I mean, those things could happen, but probably you would need the tariffs just to almost go away or be really, really reduced in like almost overnight. Uh, so it's probably going to take time. It may take several months, but definitely need to get above the 50-day and 200-day line, and then you can reassess and say, well, then you start paying more attention to it. But it's not there right now.
And just jumping over to the weekly, because as you mentioned, still great growth, but the comparisons are going to get harder just based on the 2023 numbers here. So anything else jumping out to you, Ed?
Yeah, I mean the stock sort of, as it did a year ago, sort of came back to where it was back in 2021. So there has been this was the big tumble in 2022 with the bear market. We rallied, hit new highs, but in the end of the day, it's sort of gone sideways. The relative strength line really, while there was some outperformance in 2023 and maybe in 2024, but looking longer term, sort of gone sideways. This may not be a market leader, especially if the growth slows. Doesn't mean it can't do okay and do fine, but just something like longer term, like going all the way back to 2020 and that kind of thing, it's just not outperforming in that same way over longer periods of time.
All right. Well, let's move on to Apple, which reports earnings on Thursday, May 1st. The tech giant is expected to see Q2 earnings up 5% to 161 per share, and analysts expect revenue to climb 4% to $94.045 billion. Here's why we're watching Apple. I mean, thinking tariffs are part of this again, Ed. We'll be looking for any commentary about tariffs, exemptions, plans to shift production, and as well as looking for any concerns about demand destruction from tariff price hikes. So, Ed, even before all the tariff talk was happening, Apple was struggling. And in March, Wall Street analysts cut their forecast for iPhone sales following reports that the company had delayed the rollout of artificial intelligence features for its smartphones. But we also saw in March a survey of customers saying that they were waiting for iPhone upgrades despite a challenging fundamental backdrop. So it seems like there's some pent up demand there. But what's going on with Apple? And it seems every day the headlines are really affecting this stock. So what's on your radar with them?
Yeah, I mean, Apple could benefit from a better beefed up AI, but lots of other folks have it. They have trouble in China. I mean, China competitors have strengthened, and it does seem like Apple iPhone sales are still, they're not getting a backlash yet. It's not like there's that, but there is a lot of local competition. And then, they still face like 20% tariffs from China. They've gotten some relief on iPhones made from, say, India, but it doesn't seem like that'll last. At some point, there'll be some tariffs that kick in on electronics, and they could be a lot higher than that in China. So you can't shift production that quickly. They have done some, but still, it's a long process. Their growth wasn't necessarily that strong anyway. It's just hard to go. Like, this has not been growing especially fast. The relative strength, and it really hasn't been outperforming, since last June when it sort of had a rebound. So it just, the growth is slower. Where the other names we were looking at were slowing to a low double digits. These seem to be slowing more to the single digit. Not terrible, but just a little bit different. And again, tariffs just so much, and we just don't know. And Apple doesn't know. Again, with all of these companies that we've talked about and we'll talk about, how much guidance will we get beyond Q2? I mean, or the next quarter? Maybe we know that, or you have some sense. But then after that, a lot of companies are pulling their guidance, saying, "Well, we don't know. I mean, how are we supposed to know?" Uh, so that those are a lot of questions won't be answered probably on these earnings calls.
And Ed, we're on the daily chart here. And as you mentioned, just looking at these EPS and sales figures, we can see that slowdown here, as you talked about. And again, Apple looking a lot like these other mega cap tech charts, well below the 250-day line. Pattern recognition says consolidation here with the 260 buy point, but I'm guessing you probably are not going to want to buy it out of earnings. So what would you like to see develop with this chart?
I think it's the same thing. It has to go above all those key levels, the 50-day, 200-day line. I'd say get at least to like the 240 level or the 250 level, and maybe then form a handle to somewhere in there. That would be, again, but this might take quite a while. It just might, and just something that to be looking at. But I think we just need to wait for more time.
All right. Well, because it's such a big week with earnings, we have another extra big stock for you to look at, Ed. That's Spotify, which reports Q1 earnings on Tuesday, April 29th. The audio streamer is expected to see earnings surge 141% to 251 per share, and analysts expect revenue to climb 24% to $4.82 billion. Here's why we're watching Spotify. We'll be looking at subscriber ads and monthly active users. And we'll also want to see if Spotify launches a higher price super fan tier. So, Ed, we've seen these other Magnificent Seven stocks struggle, but Spotify has been one of the strongest stocks out there, rising more than 50% in the last 6 months. And about 6 months ago, the company also rolled out an AI playlist feature to help people discover new music. That's rolled out to over 40 countries so far. So it seems like Spotify, one of the bright spots in the market right now. So, what are your thoughts there?
Yeah, absolutely. And strong growth, not too long ago, turned profitable. And that really is a big thing because when you're essentially a software company, which they are, yeah, there's tiny royalties, but essentially every dollar almost is like a dollar in profit or so close to it. So you really can see that flywheel turning up. It's still supposed to be really strong growth in 2025 and then solid as well. And, what also is that has strong growth. This is a growth company that is pretty much insulated from tariffs. I mean, you could argue that with Netflix. Maybe you could even argue more because this is based in Europe. So nobody's going to backlash. Some people might go after Netflix like somehow, some way, but there's no real reason to do that with Spotify. Uh, and it's recession resistant. Not, I mean, obviously, we go into recession, some people will cancel, but most people are going to say, I want my music, just like they want their Netflix. And honestly, some people will forget. Even if they would have canceled, they'll just forget that it's on their credit card and just There it is. They have their monthly or annual subscription. So it's just in a really good spot when you're thinking, I'd like growth and some kind of defensiveness versus the economic and policy headwinds. Spotify is way up on that list.
All right, Ed. Well, we're on the daily chart here with Spotify in a double bottom base with a 621.20 buy point. And this one looks like it could possibly be actionable compared to the other charts we've looked at. So talk to me about this chart. What are we looking at here? And if it breaks above the buy point before earnings, how are we handling that?
Yeah, I just think there's just a lot of risk. I mean, yes, I think there's a lot of reasons why you could be positive about it, but you just don't know. I mean, you can see the left-hand side of the base. This thing sold off too, just because it might be tariff resistant, it might be recession resistant, but it's not market resistant. If the market sells off, this will sell off too. Just because it might relative strength might be strong, that won't make you feel better, when it's down less than the market, say. But yeah, if it goes about, so I think you'd want to wait. You could do an option play, but it's just the risk is in there. If it weren't for earnings, you could argue that it's actionable now because there's sort of a trend line break from the top of the base through that you could have played. But again, there's just earnings coming in. The market's run up a bunch in the last few days. It wouldn't be surprising to see the market pull back just because of just after a big gains. But it's setting up very nicely. This should be definitely on people's watch list. The RS line is at highs. They're showing stronger. The accumulation distribution rating is a solid. It's B. Uh, there's just a lot of positive things about this chart.
So this is a wait and see for you.
It's a wait and see. I think heading into earnings and so much, and especially given that there's so many things that could happen even between now and then, just on other things, you don't want to be caught into that. If you do an option, that's one to play it, but otherwise, I think it generally we try to say it's just the risks are too high with earnings.
All right, Ed. Well, those were some of the big names on our radar, but there's a lot more out there. So let's take a look at another tech name, Microsoft. That company posts earnings on April 30th. And again, looking like a lot of these other Mag 7 charts in a downtrend. But we see it's trying to close above this 50-day line, but this looks like it's going to need a lot of repair work.
Yeah, we want to see if they're monetizing AI, which is important for them, but also for so many others. Hey, if Microsoft can monetize, maybe they can get it. But if you look on a weekly chart, you can see this relative strength has been lagging for a long time. You can see it on the daily, but it lagged. It's really been lagging, for the past year or so. And really, it's been a while. And it didn't even hit new highs late last year or early this year when the market was. So it didn't even on an absolute basis get up there. So it's been a real laggard, even relative to some of these other mega caps. Could have turned around, sure, but it needs a lot of work.
All right, well, let's take a look at Sprouts Farmers Market, which also reports on April 30th. Again, we're still on the weekly here. This one in a cut base with a 178.99 buy point. And we see that RS blue dot there. So relative strength hitting highs ahead of this breakout. So thoughts here.
Yeah, I mean, the profit growth is tremendous for this company. I mean, consistently for grocers have very low margins usually, but they have pretty good, premium pricing for their natural foods. On a weekly, wasn't really an actionable spot. There probably was on a daily. There were some little resistance areas, but right ahead of earnings, and I don't think anybody would get shaken out of this. You like handles to shake, but that last little pause before to these days, it would have been great if that had continued heading into earnings, but it's not going to wait for the market. But it's acting great, but it's sort of in no man's land between maybe some early entries and the buy point. But definitely watch it for this for this name. It's a nice setup.
So kind of like Spotify, wait and see if it can get above this 178.99.
Yeah, or unless they form a handle, like if it pulls back over the next several days heading into earnings and then it moves beyond that, then that could be an option.
All right, well, let's move on and take a look at Brinker International. They're the owner and operator of big name restaurant franchises. May be familiar with Chili's. That's one that they run. They post Q3 earnings on April 29th. And again, we're still on the daily here. Talk to me about this chart and what you see here.
Yeah, this one went on a big run because they turned around things. It's been a while since it's gone to run, but the earnings are supposed to be really well strong. They're in the middle of fiscal 2025, and then growth should slow, but still strong growth in there. And the valuation isn't super high. I mean, this one probably doesn't have the same expansion opportunities that sometimes when you see these hot restaurants, they're PE ratios get very high because people see the opportunity for massive expansion, and that's usually where you see the profit growth. I'm sure Brinker is doing some expansion, but nothing like you see on some other names. But this is setting up. I mean, this could be the potential of a handle right here. That would be great because there was some resistance around 169. It did sort of move out. You could have tried to play that, but I think at this point you want to wait just to wait and see. Uh, see if it can sort of pause here. I'm not sure if that'd be high enough and that to be a true handle, but that would be the way to go. But this is one of the best looking names in the restaurant space. And
All
we have
right.
seen some weakness in the restaurant space. There's concerns about consumer spending. So I think there's reason why you'd want to wait to see how the earnings play out.
All right, so another wait and see for our list. Let's move on and take a look at Visa. They post Q2 earnings on April 29th. Again, it's consolidation here at 366.54 buy point, but this chart looking very choppy, Ed. So thoughts here.
Yeah, I mean, we saw it was holding up, and then everything sold off in early April. I mean, we saw that with a lot of defensive names. They were often really big sellers because people were just dumping everything. It's bounced back, but it hasn't recovered there. So need to get above the, I guess if it went strongly above the 50-day line or got above the 351 area on earnings, there could be opportunities here. I'll be looking for things like cross-border payments because that's a very high margin issue for them and sort of juicy. Well, I don't know. I mean, travel seems to be down, and maybe it's going to be fine elsewhere, but travel to the US is really down. So that could be something that's a factor, but still worth watching. But yeah, pretty ugly action there.
All right, well, let's take a look at Mastercard. That company's scheduled to report May 1st. And again, similar that we see here, we see that early April sell-off. This one tried to get back above the 50-day line, but was turned away. Inching closer though, Ed. So thoughts here.
Pretty similar to Visa, except this one really sold off even more. Like it really went through the 200-day line. It's off of that, but it seems even uglier in that front. But we'll see. They could set up again. Forgive it. It'd be nice if they sort of took some time to repair and make the right side of that base look a little nicer than the left-hand side or the middle of it.
Well, we'll see if Mastercard can do that. You talked about concerns about travel, so let's check in on Booking Holdings. That travel platform has earnings on April 29th. This one in consolidation here, back above the 50-day line. So thoughts here, Ed?
It's interesting because a lot of airlines have basically said we're not giving guidance or giving wild guidance, certainly not after Q2. So I'm a little curious to know why this is picking up. I don't know how their fees, because it just seems like you'd be getting it off of like how many, you fees off of things. I'm not sure how they get collect their money, but it would seem like if the number of trips falls, that would be a concern. So I'll be very curious to see how this one plays out. This has been a big winner, needs to get up. I would, it seems like it's sort of deep in a base. You'd like to see some more strength and again, wait and see like everything else. It's not terrible, but I think the whole travel theme seems a little weaker, which makes me a little more nervous. If you're to be the best looking house on a bad block is never, people say that's not a good thing. You'd want to be a leader in a leading group, not a leader in a group that seems to be struggling.
All right, well, sticking with the travel theme, Ed, let's take a look at Royal Caribbean. Reports earnings April 29th. Thoughts here?
Yeah, I mean, travel concerns. I'm not sure all the things like are people not coming from Europe to here, or I don't know why they're coming in just if it's growth concerns, but there definitely seem to be concerns about bookings here. So that if Royal Caribbean can dispel those concerns, then this one might go on again because Royal Caribbean was a big winner, but you can see there's been a lot of damage in the last few months as people really sour on travel.
All right. Well, we had a lot of defense names report over the last week. We have one next week with Howmet Aerospace. They report on May 1st. This one in a double bottom with a 138.06 buy point, reclaiming that 50-day line this week. And again, another RS blue dot here. So Ed, talk to me about this one.
Yeah, this is really strong. As I understand, there is a little bit of an AI aspect to this. I forget exactly how that works, but this was one of the best non-tech companies in 2024 in terms of
Like
stocks.
everything's AI now at this
Everything's
point.
AI. There was something that they have some angle, but really strong growth. The growth is still supposed to be solid 2020, 25, 2026. I mean, they're exposed to aerospace with Boeing and Air and Airbus and some other things. So we'll see how that goes. But this is obviously holding up very well. If it weren't for earnings, you probably could have tried to play this. It just feels like you're adding on risk in this situation. Yeah, there's been some volatility, but all in all, a it's still showing real strength. The RS line already being at a new high. Definitely another wait and see. But what the good thing is that there are a lot of things that are coming into things. But I mean, I'm always going to say wait and see. If the stock is performing, I'm never going to say buy it now ahead of earnings. So but there are a lot of stocks that should be on watch lists that have earnings next week.
All right. Well, I think wait and see is becoming the emerging theme here, Ed. So let's take a look at Caterpillar. I think they're reporting earnings on April 30th. And again, just to compare here, see another downtrend. So obviously, we're probably not buying ahead of earnings, but you're wanting to hear thoughts about what they might say.
Yeah, this is wait and hear, not wait and see. I'm not really interested in looking to buy this one. I want to hear what they have to say. They're an economic bellwether, like on things like what are they construction and machine, mining and stuff. What are they hearing about projects and stuff going forward? Not just in the U.S., but around the world. What's happening? I mean, we're trying to get some sense of are tariffs having a chilling effect or not? We hear, oh, everything's frozen, but we haven't seen it in the data yet. It doesn't mean it won't happen or isn't happening, but these are the kind of reports, some of these stocks that are down. That's what I'm interested in with this name.
All right, well, let's hop on over to the pharmaceutical sector, Ed, with Eli Lilly, scheduled to report on May 1st. And again, we have another kind of messy chart here in consolidation, just jumped back above the 50 and 200-day line here this week. So thoughts here?
Yeah, there's still a lot of growth with this company, and they do have other things in their pipeline. A lot of it's obesity related, but not just. Yeah, I mean, see that growth and see how that might go. I mean, I don't know what they'll have to say about possible pharmaceutical tariffs. They may not want to say anything because they don't want to. I think getting above 935 would be important, or getting closer there and then pausing. That would be where I would be looking for it. Uh, if it weren't for earnings, I understand why somebody might have wanted to play this, but it just feels like you just want to wait and see. It is a little messy, so it's not really high on my list. You can see the RS line hasn't been that great. The earnings are great, but people knew that. People knew those earnings were coming. So that was already priced in the stock. Can it make another run? I mean, it probably can, but I don't know yet.
And let's just look at Fizer really quickly too, just to compare, because they also report next week, and we can see not as pretty as a chart as Eli Lilly, but again, any thoughts here with Fizer?
Yeah, I mean, they had tremendous earnings in the last quarter, but I think there were special reasons. The prior year was just terrible. The general trend is not good. I mean, it's supposed to, there was a jump this last year, but I think that's after post-COVID plunge. But it's not supposed to really be growing much in the next 2 years. It's just a big difference.
All right, well, we talked about, companies that make drugs that could possibly make you feel better, but let's look at Altria Group, formerly known as Philip Morris. They're scheduled to report on April 29th. And this has been a name that's been coming up, holding up pretty well. We saw this breakout here in March, but thoughts here on Altria Group?
Yeah, I think the concern here is that if the market takes off again, stocks like this will probably lag. But if you
People are
go
putting
to
their cigarettes and Zen
Yeah,
pouches
I mean
away.
this is very defensive. This People are not going to cut out their cigarettes. They'll cancel Netflix before they quit their cigarettes. Go to a weekly and you can see the yield. I mean, that's why people are buying this. There's a really fat yield, 7%, even after some pretty good appreciation there, where there might, and so that's a pretty good yield. You are taking on the capital risk. Now, lately it's been capital gains, but that's just a concern. You're really if you do this, you're betting on the market to be weak. Is what it is, and maybe that'll turn out to be there, but you just have to know that, and it's still not a guarantee that the stock will rise. You saw the volatility in early April, so if the market really sells off again, like some others, MO might lose the mo.
All right. Well, we don't want to lose the mo just yet. We have some oil and gas names to take a look at, starting with Exxon Mobil, scheduled to report earnings on May 2nd. Again, in consolidation here, still on the weekly, but well below, inching up toward the 10-week line and below the 40-week line.
Yeah, oil prices have come down a lot. I think even natural gas prices have come down after they had spiked for a while. The relative strength line is really down for quite a while now, basically since late 2022 or so. I mean, they're just not going anywhere. Oil being down, I mean, it's just not, that dynamic has to change. Energy prices have to go up. for these stock for oil and gas producers to rise. I mean, it just comes to that. And there's probably going to be weaker demand for gasoline as well. So it's the price will come down, and even selling on the refined front, though, it's just not a good situation for big oil.
And let's just quickly look at Chevron because they also report on May 2nd, again, well below these moving averages. So any final thoughts here, Ed?
No, not really. Same thing. You need price to recover. You're not going to hear it from the earnings. It just needs the prices. Prices need to go up is basically it to really get that bouncing back.
All right. Well, Ed, thanks so much for your thoughts today. We had a mega cap episode here of earnings cheat sheet. If you want even more market analysis, be sure to tune in to Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And as always, thank you so much for watching, and we'll see you all next week.